I'm Charlotte McLeod with investingnews.com, and here today with me is Shawn Khunkhun, President and Director of Contango Silver and Gold. Thank you so much for being here. Great to have you.
Yeah, it's nice to be on. Thanks.
Yeah, it's really good to be speaking with you. And since it's our first time speaking, I wondered if you could start by giving a quick overview of your background in the resource space and your current work.
Yeah, so I've been in the resource space for 22 years, and I started in an investor relations role back in the 2000s. I went to work for a company that was a startup gold miner, and I helped them grow. We facilitated about $500 million of capital that went into that restart, and it was very successful, a very great bull market in precious metals from 2000 to 2010. And I endured during the bear market and got to know some of the great, serially successful mining entrepreneurs. You get to know a lot of people during downturns. And so really where my skill set is through raising capital, through putting capital into distressed assets, and through leadership, really growing businesses.
Well, great overview, and we'll get into what's happening at Contango, but I thought first we could talk about the silver market. So silver, it's known for its volatility, and I think it's really put us through the paces this year with the run to all-time highs, now the big pullback. Where would you place us in the cycle?
Yeah, no, it's silver's something where when I was building that gold mining company back in the 2000s, silver caught my attention, and it had this run from September of 2010 to April of 2011, and I personally made more money speculating in silver in 6 months than I did building that gold mining company in 6 years. So I really became quite fascinated with silver and have spent the last 6-7 years really focused on understanding the silver market, understanding that growing industrial demand. And really what's changed in silver in the last century is industry. Industry is putting a lot of demand on mining companies. They're taking 50% of all metal that's being mined. We're producing about 800 million ounces globally, and half of that's going to EVs, solar panels, et cetera. Now, investors turn to silver when gold is performing. You know, for a lot of investors, you know, it's not reasonable to go out and buy an ounce of gold for, you know, depending if you're pricing it in rupees or yen or pesos. So they turn to the alternative of silver. So what happened last year, in my opinion, is that the deficits that we were seeing, you know, hundreds of millions of annual deficits that went on for about 5 years, got into a moment where as gold took off from $3,000 to $4,000 and ultimately up to $5,000 in January, the silver investor came in, and because of the industrial demand, that put the greatest price pressure we've seen in the history, and it sent silver prices to $120. Now, that's not a sustainable move, and I think for industry experts, like we're here at the Rule Symposium, you know, Rick got up at a conference in Vancouver that month and said, I sold my physical silver. And so the way I look at it, I was actually personally buying physical silver within the last few weeks. And the reason I'm doing that is, sure, the price could go lower. You know, could we see $40 silver? Could we see $50 silver? It's possible, but based on that continued industrial demand and based on mine output, I believe higher prices are inevitable. But you know, we're in a consolidation, and there is going to be price pressures at, you know, $80 and at $90, and so those are areas we're going to have to work through. But ultimately, I like the prospects of silver, and I think this offers investors a pretty good entry point to the metal.
Very, very nice overview. And I like that you mentioned the industrial and the precious side, because I was going to ask you, which one of those do you see as being more in the driver's seat right now? It sounds like maybe leaning toward industrial, but what do you think?
Well, I think for a lot of speculators, they're only interested in silver as a trade, right? And I think where they're going to want to focus is that monetary demand. Because industry is not going to send silver prices soaring in a very short period of time. That's going to happen with, you know, mass speculation. So I think for the speculator, I think it's the monetary demand that you're going to want to watch. You're going to want to focus on lease rates, and you want to focus on dealers and who's buying metal and futures contracts. For me, I'm trying to use silver to acquire more gold. And so I think, and I've thought since 2020, with the silver to gold ratio being at 125 to 1, that it was a really good time to go all in on silver. And I've taken the opportunity as that ratio is normalized to increase my gold holdings. But I'm at a point right now where I'm getting back, that ratio's popped back in favor of silver. So for me, ultimately what I'm trying to do is when that ratio comes down, whether it's 30 to 1, maybe it goes to 20 to 1, potentially 10 to 1, is to take that silver and turn it into gold.
Well, I think that makes a lot of sense. And I wonder in that case, we've been talking about silver, but is your outlook for gold in terms of where we are right now, is it similar, or how are you seeing it?
So I was born in 1981. So I didn't experience the run up to $800 in 1980. I studied it. What I did experience is gold going from 300 to 1900 in the 2000s. And based on my own experience and based on history, I was convinced prior to the great financial crisis and prior to 2020, and I marked those two times because those were times where governments all over the world provided a lot of liquidity, created a lot of debt, and put a lot of currency into the system. And so prior to those moments, my long-term target on gold was $3,500. I thought the price of gold, and this is back when the price of gold was $400 or $500, I thought we were going to live between 2020 and 2040 at $3,500. I thought we'd get a price spike to $8,800, but I thought the long-term average was going to be about $3,500. Now that was before all of this money printing. And so the short answer is I don't know. And I think what I focus on is when I first got into the industry, I was putting together marketing material when the price of gold was $300 and the cost to mine the gold was about $250. So a good gold miner could hope to make $50 an ounce in the ground. What I want to focus on today is if I take my company, for example, Contango, we're selling gold today at $4,000 and we're producing it at under $2,000. So the margin there's $2,000 an ounce. So mines that we'd historically think of as small mines, like a 50,000 ounce a year producer, that's generating $100 million of free cash flow. So for me, whether it's silver or gold price, I think we're in a universe right now where it's so profitable to be a miner that we don't need the prices to surge. We just need them to stay up here. And for what we saw last year is we saw the mining industry, the margins were 30%. And, the next best industry, tech, was at 15. So we're seeing record cash flow, we're seeing record margins, and so generalist investors, they're waking up to the fact that mining stocks were up 200% in 2025, and that's why we're seeing a great deal of rotation that's come into the sector. But what happens at the start of every sector is all these companies that have been starved for capital have gone out and done new issues, right? So that dilution has kind of put a ceiling on the price appreciations until we digest and get ready for that next leg up.
That's all really interesting. And I did want to ask you about the level of investor interest right now, because I see among our audience concerns about the price levels going down and a lot of questions about, well, when will gold and silver get going again?
Yeah.
But as you mentioned, the margins are still so strong. So are you seeing people recognize that, or is that something that people still need to realize more?
Yeah, like if we take this conference, for example, this is my 5th year here. And that's when Rick put on his first show here in Boca. It's night and day in terms of what the 2022 conference looked like and what 2026 is. And so I think we're starting to see a larger community develop, but I was around in that 2010 high in peak mania and for those parabolic moves. And if you look at some statistics around, we could take something like brokered financings. Despite more money being in the system, and despite on a relative basis other asset classes, you could take the Dow, you can take the S&P, we're not even nominally back to where we were in 2010, yet the gold price is twice as high. There's way more money in the system. The companies are way more profitable. So from that standpoint, I've got a friend, Bob Thompson, who he's at Raymond James. He refers to the mining clock, right? So, 12 o'clock is when you want to be out of the trade, right? And, I think if you talk to Bob today, he'd probably say we're at like 7 or 8 o'clock in terms of the precious metal cycle. But what I've experienced is a lot of the gains occur in those final innings. And so, if you're a generalist, you really don't have to be around for 1 to 6. It's pretty boring. It's a stealth move. But I think we're moving into a market where it's pre-mania, but we're setting up for a pretty good market here.
Well, I think that will be reassuring for people. And I know it sounds like you're less concerned about the upper limits for prices, but I'll ask you what I think is one of my fun questions for this event that I'm trying to bring people. So I see a lot of questions from investors about the bottom for silver. So you mentioned that. Do you think we get back to that triple digit level this year? Or is that a further thing that happens?
Putting a calendar on it is difficult. It's hard to put your calendar on when confidence in the system goes away, right? That's something that's hard to mark. For me, it's all relative. Like, what is it going to be the cost to mine this stuff? Where are other asset classes trading? Like, if we saw a big deflationary event that sent other asset classes like real estate, like equities, like bonds lower, well then, I experienced in 2008 during the financial crisis, so gold pre-crisis averaged, $400 or $500 an ounce. Pre-crisis, it ran up to $1,000. During the crisis, it pulled back to $680. A lot of investors said, well, what's happening here? And the same questions were being asked when we got into the Middle East war. Like, why? This is why we bought gold. Why isn't it higher? But what people have to appreciate is when you need liquidity, that's why you have that insurance package. That's why gold exists. And again, on a relative basis, when we had the Dow Jones sell down to 6,000 or 7,000 points from 18,000, gold only going down a few $100 and actually being twice as high as it was previously was actually pretty good. So for me, it's less to do about the nominal price. It's more to do with the relative price. And I think what's the cost of a loaf of bread? What's it going to cost to pull this metal out of the ground? I think what excites me about the profitability ongoing is the fact that, like when you talked about silver, silver is a byproduct metal, right? And it's hard to get copper out of the ground. It takes a long time. It takes a lot of money. If we're getting a lot of our silver as a byproduct of copper mines, and these copper mines are taking 30, 40, and 50 years to build, where are we going to get the silver? And so that's why I think, we're going to see triple-digit silver again. Does it happen before the end of the year? I don't know. But all I do know is if you're a good silver miner, you're probably making $40 to $50 million on every 1 million ounce you mine today, which is a pretty good margin.
Well, and let's talk about what's going on at the company as well. So I think worth noting, the current company came about as the result of a merger between Contango and Dolly Varden. So companies have come together. How has that process been playing out?
Yeah, you know what? We're very lucky. I came from the Dolly Varden side of the transaction, and I believe this is a people business. And again, we're at the Rule Symposium. Rick talks about the 1% of the individuals that are responsible for 40% of the success. And Rick Van Nieuwenhuizen, who is the CEO of the combined co, is that 1%. He's built $3 billion businesses in Alaska, built Nova Gold, built Trilogy, and he's running Contango today. So because of the people, the merger and that coming together has been very seamless. And I think we now have the appropriate skill sets in the different positions. We have on the technical side, on the permitting side, on the capital markets side. So it's a strong company today, and the merger, that integration's gone very well.
Yeah, I know that can be a tricky time. So glad to hear it's going well. And I know that Contango is producing at one asset in Alaska, I believe a joint venture with Kinross Gold. So can you share what is the company's share of production? How does that break down?
Yeah. So we do have a joint venture with Kinross, and so the mine's actually producing, on life of mine, on average, about 200,000 ounces a year. Our 30% equates to about 60,000 ounces for the life of mine. So we've budgeted $3,700 gold, and so we're generating, on average, about $100 million a year. So the Manh Choh mine is a 60,000 ounce a year producer. Now, there's going to be some years that are better. For example, next year, we're looking to produce, our guidance is 75 to 80,000 ounces, and our costs are coming down to 12 to 1,300. So next year's a year where it's, at $3,700 gold, it's going to be $170 million of free cash flow. So that is, it's a great asset. You don't have the operator risk because we've got the joint venture with Kinross, and because of that, we're almost like a quasi-royalty company in that we don't have a lot of employees. We might have 20 employees, and we've got 4 districts that we're developing. So Manh Choh gives us that steady state production to then reinvest in our development pipeline, and we're investing in a project called Lucky Shot, which is a permitted mine that'll be back into production in 2028, which will also generate $100 million of free cash flow. But those 2 mines, they're relatively small, modest mines, 50, 60,000 ounces individually. Together, they contribute to a couple $100 million a year free cash flow. But the real value in the company was Dolly Varden's Kitsault Valley asset and Johnson Tract. These are 2 big projects that'll take our production profile in 3 years to 5 million ounces of silver and 200,000 ounces of gold. Now, in the market, that's a multi-billion-dollar business, and today we're trading at a $600 million valuation.
All right, so lots coming down the pipeline. So Lucky Shot, that's the next priority. I was going to also ask about Johnson Tract. So it's been accepted into the Fast 41 permitting program. So I wonder if you can outline what that means for its progress.
Yeah. So what's great, so the Obama administration had started the Fast 41, fixing America's surface transportation. What the Trump administration's done is they've leveraged that for mining projects. And so there's a dashboard, and what that dashboard enables, so anybody, any prospective investor, shareholder can go onto the dashboard, and they could see where projects are in the permitting timeline. So if you go on there, what you'll see is that by March of 2028, we will receive our permits. So it brings certainty, it brings accountability, it brings certainty around timelines. Now, there's an onus on us to get the required documentation and studies and systems in place for that permit to be released, but it brings you that accountability and it brings you that certainty and transparency. So we're on the Fast 41, which you have to apply for and you're put on, so we're there. So that is something that gives us a lot of confidence, and it enables us to plan some of the work we need to do. For example, we're doing some infrastructure improvements, and what excites me about the project most, though, because permitting is not the most exciting part of our business, but what excites me is Johnson Tract. It's a 1 million ounce ore body, and it's 40 meters wide. We're going to get underground, and we're going to drill the deposit from depth. And why that excites me is I think there's an opportunity here to grow the resource by 50%, maybe more. And it's a pretty special, globally unique gold deposit in that it's 10 grams per ton gold. So again, it's on tidewater, it's in Alaska, it's high grade, and forget any growth. If we just took what we have, it's 100,000 ounce a year producer, and relatively low capex, about $200 million. So we can. What I like about our business is it's all self-funded. So from the cash that we have in treasury, we have $100 million in the bank, and the cash that we're generating, we can move these projects ahead and get them into production.
Well, and you mentioned some of the more longer-term years that we should be watching for the company. Anything that is a little more immediate that people should keep an eye on in 2026, perhaps?
There is. So Dolly Varden had done a lot of drilling in the Kitsault Valley. And I love the project because it's primary silver. It's not one of those byproduct mines. It's high grade. It's a safe jurisdiction. And all the drilling we did is now being tabulated into a new mineral resource estimate that's coming out this month. So we're going to see a very significant increase to the silver resource, which currently stands at 65 million ounces of silver at 300 grams per ton and 1 million ounces of gold at around 5 grams per ton. So my guidance is I think you'll see about a 50% increase to the silver, and we'll have more confidence around the gold because we're going from inferred to measured and indicated. So new resource estimate at Kitsault, we've got 5 rigs that have just completed 20,000 meters of drilling and have another 20,000 scheduled. So ongoing drill results, silver-centric results. So new resource, new drill results. We're simultaneously drilling at Lucky Shot, and so results there. So it's going to be a lot of catalysts. We're spending about $67.5 million on our project pipeline. So there's a lot of development and a lot of advancements that we're making.
Okay, yes, very, very immediate in that case, so we can look forward to those. The other point I wanted to mention, Contango said recently you finished delivering early on the 2026 hedge contract. So I wonder if you can talk about the significance and explain for people who might not understand what that means.
Yeah, so when Contango first went to work with Kinross to take Manh Choh into production, the company was small and the liquidity was not what it is today. Today we're trading $10, $15 million worth of stock on a day-to-day basis. We've got great liquidity. Back then we didn't have that liquidity. So the company entered into some debt to build the mine, and one of the covenants on the debt was to forward sell some gold so that the lender had certainty around it. So the company had to enter into forward sales in gold hedges. And so when the mine was first built, 125,000 ounces were hedged. One of the reasons I think Dolly Varden had the opportunity with Contango, that the valuation was depressed, was because of those hedges. Now what's happened in less than a year is the 65,000 ounces have all been delivered early. So now the company is unhedged, which is incredible. So if, with gold at $4,000, we're getting spot gold prices, gold goes higher, we're going to experience that margin. We weren't going to experience that previously under those hedge contracts. So I think it was a bit of a game changer, a bit of a step change for the company. That news just came out this week. So we're an unhedged, high-grade, safe jurisdiction producer.
Right. And so are those deliveries, they're finished for this year, and then are there more after that?
No,
You're
so
done?
we delivered into the 27 contract. And so we had already delivered into 26, so we have no hedges.
Okay,
We're hedge-free.
Quite significant. All right, well, we can start wrapping it up. I wonder if there are any final thoughts that you would want investors to take away, either about silver and gold or about the company.
Look, I think the key message, particularly for anyone that's new to this, is there's a tremendous amount of volatility. And that can be very difficult for some to stomach, but that's what makes our sector so great. It's what makes it, what gives it that opportunity. So I think the way to approach this is from a longer term perspective. And I think, you bet on a management team. And in our case, both myself and Rick have driven a lot of value to shareholders. We've got a history of executing. And you could take that same principle to the gold and silver price. Be patient, dollar cost average into it, set some realistic expectations. And, my experience over 22 years of investing and speculating is, these markets and these companies and these metals have far exceeded my expectations. They've just taken a little longer to do it.
Yeah. Sometimes a little patience is definitely needed. Well, thank you so much for coming on to talk about the markets, the companies. I think this was really valuable.
Yeah, thanks for having me on.
Of course. And once again, I'm Charlotte McLeod with investingnews.com, and this is Shawn Khunkhun with Contango Silver and Gold.